Today, let's discuss about buying options. It's a very popular strategy, and often you can see a popular figure promising $1,000 investment that he made, which turned into $500,000 or $1,000,000 in few months. He might be sipping a glass of wine on some sun-drenched island, and usually what they are referring to is buying options. So why does option buying not work? After all, it has worked for them. Let's assume that what he's saying is honest and trustworthy and true. So let's see why it does not work for most of us. The fatal flaw with buying options is that it is an aging or decaying asset. We all know aging is universal. We all age and die. Yeah, we can exercise, eat healthy food, be happy, and prolong the aging process. But aging will happen and we will die. When you buy options, it's similar to that. An option has an expiration attached to it, and on the day of expiration, it is worthless. We cannot say that option buying does not work. Yes, there are a lot of people who have made lots of money buying options. There are exceptions and there will be exceptions, but as a group, option buyers generally tend to lose. Remember, when you buy an option, you got to be correct with the direction. You have to predict whether the stock is going to go up or down correctly, and that alone is not sufficient. And then the stock has to really cooperate with you, and it has to move faster than the time decay, which I'm going to touch upon right now. The option Greek that defines what is called aging is called theta. Think of theta as like a fresh fruit. On the day you buy, it is fresh, but as it goes past couple of days, slowly the fruit loses its texture and freshness, and after a couple of days it spoils. Theta is exactly like that. Theta is a measure of the rate of decline in the value of an option due to the passage of time. It can also be referred to as the time decay on the value of an option. If everything is held constant, the option loses value as time moves closer to the maturity of the option. Looks a little complicated to understand. I'm going to use an example to show what the power of theta and why option buying rarely works. This is an example of Apple. Today the stock price is $153.61. I want to buy an option at the strike price of $155. So the price that I'm going to pay, let's say it's somewhere between $1.59 and $1.64. It's about $1.60, or I'm going to pay $160 for this option. So the strike price I'm saying is $155 and the option price is $1.60. So to make a profit, and the expiration by the way is June 17th. So it's not only important that the stock has to go up to above $155, it also has to happen within 18 days. So now you have two variables. One is the stock has to go up. The second one is it has to go up fast enough that it crosses 155 within 18 days. And it's not business days, by the way. So you have 18 days left, and now comes the factor called theta. So theta on the first day is losing 0.05 cents of the $1.60. Think of it like a fresh fruit. It's day one. Second day it might lose 6 cents. The third day it might lose 10 cents, and so on and so forth, all the way until on the day of, on 18 days from now, if the strike price is not reached 155, this option will expire worthless. So to make a profit, Apple should be above $156.60 in 18 days. Yeah, now the rosy picture is, let's say the stock goes to $200 for whatever reason, some new iPhone release or something like that, it reaches $200. All you have paid is $1.60 or $160, and you're going to make about 200 minus 155, but 45, $4,500. Approximately you're going to make $4,300 just by a small investment of $160. Yes, if you get an option buyer correctly, you have an unlimited profitability, and that's how you make money. But for an average investor, buying an option generally does not work just because of the theta factor or the time passage and the aging process. So is it that we should never buy an option? No, there are some alternatives which I'm going to go through now. Debit spreads is a popular strategy and an alternative to buying options. So basically you buy an option and also sell a corresponding option against it to reduce your initial investment and also cap your upside potential. And there's also covered stocks and poor man's covered call. All these three strategies I will be discussing separately with an example. I want to wrap up the segment about buying options by what one of my mentor Tony Batista of Tasty Trade had mentioned. Option buyers have very nice stories, but it is the option sellers who drive nice cars. Happy and safe trading, my friend.